Hi students, in the last video we saw that format of trading account and adjustments and what are the entries are coming which side of the debit side and credit side of the trading account, and we solved a problem. So now I'll go through the profit and loss account. Profit and loss account. So what is a profit and loss account? So this account is main account of final accounts which gives the final working results of business. So final, this will give a results of final working results of a business, whether it is a profit or a loss of the business. It is prepared on the basis of indirect expenses and indirect incomes. It is prepared on the basis of indirect expenses and indirect incomes of the business concern. Profit and loss account is maintained to ascertain net profit or net loss. So we'll consider that a net find out in the working results of a business. So this maintained as a net profit or a net loss. So the debit side of a profit and loss account includes all indirect expenses. In a debit side of the profit and loss account, we'll find the entries of indirect expenses. Indirect expenses such as office administrative expenses, financial expenses, selling or distribution expenses, etc. These expenses records will come under a debit side of the profit and loss account. Next is the credit side of the profit and loss account includes indirect incomes. So indirect incomes. In a credit side, we are entering the indirect incomes in a profit and loss account. So like commission received, rent received, discount earned, etc. So when the credit side of this account is greater than debit side, when the credit side of the amount is greater than debit side, greater than debit side, it is called as a net profit. And when the debit side of this account is greater than credit side, it is called a net loss. So later on, net profit or net loss is transferred to capital account. So this amount, net profit and net loss, is transferred to capital account in a balance sheet. So profit and loss account is a nominal account. So net profit and net loss, that amount will transfer to capital account. That entry we can see in the balance sheet. So profit and loss account format. We'll see now the format of profit and loss account. So what are the entries are coming in a debit side and a credit side? It is mainly the account of final accounts which gives the final working results of business. So it is prepared on the basis of indirect expenses and indirect incomes of the business. So indirect expenses are coming under the debit side and indirect incomes are coming under credit side of the profit and loss account. So when calculated in a trading account, we'll get the amount of some gross loss. If it is a gross loss, we can enter the gross loss, or if it is a gross profit, we are taking the gross profit in the credit side, and if it is a loss, we are taking in a gross loss is in a debit side, since it is a expenses and it is a incomes, indirect income. So we are transferring that trading account amount in a P&L account. Next comes the salaries. Next comes the expenses. We'll see the first we'll see the debit side entries. Next is the salaries and wages, rent, rates and taxes, insurance, bank charges, discount, audit fees, depreciation on land and building and plant and machinery, furniture, etc., traveling expenses, advertisement, printing and stationery, and interest paid, loss of fire, loss by fire. These are the entries of indirect expenses. So when the goods is reaching till the warehouse, the to the person, so what are the expenses are undertaken for advertising, traveling and warehousing. So these are the expenses are indirect expenses. So those entries are coming in a profit and loss account debit side. And we'll see next. So printing and stationery, interest paid, loss by fire, loss by theft, packing expenses, commission, bad debts, bad debts, new new RDD. So these all entries will come under a debit side of the profit and loss account. So how we'll get the net profit? So this net profit will transfer to capital account when the credit amount is greater than debit amount. So then we'll transfer then it will be the net profit. So that net profit will transfer to capital account. So now we'll see the uh, entries of credit side of a profit and loss account. Gross profit brought down, so if it is from the, it will be transferred from the trading account. And next one is rent received, commission received, interest on investment, interest on deposits, miscellaneous income, discount received. So these are the indirect incomes from the business. So these are coming under the credit side of the P&L account. So when the debit side amount is greater than credit side amount, so we'll consider as a net loss of the business. So this net loss will transfer to capital account. So this is the format of P&L account. Based on this format, we'll solve some problems on this. So now after the trading account, we saw that format of profit and loss account. After the profit and loss account, we are looking for a balance sheet. So third entry is balance sheet. So balance sheet is a statement showing financial position of a business concern. This balance sheet showing financial position of a business concern. Balance sheet has no debit or credit side as it is a statement, and so balance sheet has no debit or credit side as it is a statement on not on account, not on account. Left hand side of balance sheet is liability side, and right hand side asset side. Both sides of a balance sheet should be equal amount. So in a liability side and the asset side, we should get a equal amount. A balance sheet shows assets and liabilities of the business. So balancing how business is balancing, so that amount should be equal in a both side, in a debit side, in a liability side and asset side of the business. So all debit balances of personal and real accounts are shown on the asset side. So all the debit balances of personal and real accounts are shown on shown on the asset side. So actually while making a trading account and a P&L account, we are using the left side is the debit and right side is the credit. But in the balance sheet, it is the in a right side it is the debit side and left side it is credit side. Okay, credit balances of all credit balances of personal account shows the liability side. So no nominal account will appear in the balance sheet. So no nominal account will appear in the balance sheet. Only we need to keep remember asset side entries are debit side and liability side entries are credit side. So in the trading account and profit and loss account, we'll see the dates, but in the balance sheet, we won't see any dates. We won't consider in the balance sheet. Only we are looking for the total amount in a liability side and asset side should come equally. Total amount should come this amount and this amount should come equally in a balance sheet. So but in a profit and loss account we are seeing looking for the closing stock and opening stock, we'll see the dates. So liability sides are the, you had to think that this is a credit side. Liability side, credit side entries will come in a liability side, and asset side debit entries are coming in a asset side. So first one is capital opening and net profit. So in a profit and loss account we found a net profit and a net loss. So that amount, that net profit and net loss will transfer in a balance sheet. So interest on capital, so after calculating these things, after deducting drawings, interest on drawings and net loss, so this amount will get a here this in a second column. Then bank loan, bank overdraft, sundry creditors, bills payable, outstanding expenses, pre-received incomes, these are the entries of liability side. And in the asset side, so cash in hand, cash at bank, bills receivable, sundry debtors, goodwill, furniture, plant and machinery, land and building, prepaid expenses, outstanding incomes, and a closing stock. These are the assets of the business. So this is the format of balance sheet, and so we need to check here only the equal amount should come in a both sides. So then only the problem will be correct. So then by using this format, we'll calculate, we'll solve some problems on the balance sheet. So in a balance sheet, we need to check only liability side and liability side amount and the asset side amount. We need to check this both total amount should come equally. So we need to check this one. Then this is the format of balance sheet. So in a final accounts, we saw that what are the accounts used to come. So like trading account. First, we'll do the trading, pass the trading account, then profit and loss account. Then after profit and loss account, we'll pass a capital account in a balance sheet, and we'll calculate a balance sheet. So seeing the what is the how business is running, we'll come to know from the balance sheet. So these are the formats of final accounts, and based on these formats, we'll calculate, we'll solve some problems on this. So every item in the trial balance must be shown only one time and in a just one part of the final accounts. Final accounts excluding silent and hidden adjustment. And every adjustment must have two effects. Every adjustment must have two effects in a final accounts, that is debit and credit. And we have already studied many topics in a 11th standard final account of proprietor concern. Most of the theory part explained in a journal entries and effects of the journal entries and ledger, trial balance, and many topics are not repeating in a 12th standard accounts. So some new entries and new adjustments are given in a new entry and new adjustments are given in a 12th syllabus.